Wealth building is not an easy task. It takes a lot of hard work, a lot of preparation, and a lot of planning. So for people that don't really care about the nitty-gritty of building wealth, you can pay somebody to manage your money and do all that dirty work for you, and you just see your money at the end of the day. But it comes at a cost. So for people that want to do it themselves, that want to DIY their investment themselves, this video is for you. So in today's video, I'm going to share with you guys my strategy and my approach to building wealth coming up. Hey, what's up guys, it's V here with Plenties.com, helping you reshape your financial health. If you're new here, we talk about life, we talk about careers, and we talk about money and how together they impact your financial health. So consider subscribing, and also at any point during this video, you can check out the show note and links and anything that we talk about in the YouTube description below. So for most people, when they want to build wealth or they want to start looking at long-term and retirement and stuff like that, they sit down with a certified financial planner. And what this person does is just ask them a bunch of questions, know about their goals, when they plan to retire, and how much risk they're really willing to take. And then that person would use that information, take your money and invest it. But if you really want to take that person out of the equation and do it yourself, which is what I'm doing, then just stick around. I'm going to show you guys exactly how I put together my portfolio of building wealth. Let's head over to my computer over here so we can actually take a look into my spreadsheet and how everything has been structured. So as you guys can definitely see here, I have my title up here, which is investment vault. And so down here, just something that keeps me in check. Money and emotions make very poor bedfellows. So I will use that to keep me motivated, to keep me focused on the mission, so I don't really get caught up with emotional things. Next down here is what you would see as like the different buckets that I use for my approach. So I have my 6 months expense. I have already completed that, which is my 6 months emergency fund. My retirement investment fully funded. I've already completed that. I'm funding my 401k to the max, and then dispose for trading, which is in progress. So I'm actually putting money aside as specifically for trading. And then if you scroll down here, next thing on that list is my portfolio objective. So what is it that I want out of my portfolio? So number one is that my investment goals is to double my asset every 3 years. So if I have $10,000 in asset and everything, I want to double that to say $20,000 in 3 years. And then my time horizon is long term, as you can see, and my risk tolerance is very aggressive, because right now I don't plan on retiring anytime soon, so my risk tolerance is pretty aggressive. Next thing, I look at my fund category. So what kind of funds do I want to invest my money in? So I look at growth, and income, international, and aggressive growth funds. So those are the categories that I actually use. The next would be choosing the fund. Now I know the category, so what fund should I choose? I look at 4 major things. I look at the track record, the long rate of return over 10 years. Is this fund doing pretty well? Over 10 years, has this fund been giving a positive return? Yes. Does it outperform the S&P 500? Yes. The net expense over 10 years. So I look at the expense ratio. Is the expense ratio anything under 1%? That's where it gets my attention. I start looking at that. And then I look at management. Some funds have been there with the same manager for 15-20 years. It shows me that fund is stable. Some has like turnover every 2 or 3 years as a new manager. So that's kind of a shaky fund, because you don't really know which manager is going to come in and just screw things up. So that's something that I kind of look at. And then next would be my sample funds that I just show you guys here. So I pick a category, I choose the funds that I do my research. And again guys, this is my examples. I don't want you to go out and just go buy these ones because you saw them on my my investment vault. This is just something that I'm actually testing in terms of these ones. I have funds that I've bought, but I don't want you to go do your homework. Pretty much that's what I'm saying. Don't just go buy them because you saw them here. Do your homework. And then so the next thing that I want to show you guys here is really important. And so this is how I break down my portfolio, and this is really key. So my portfolio is broken down into securities, real estate, alternative, and private equity. You'd see people would have different portfolio models, which is different from what I have. So in my case, 70% would go in my security, 70% of my investment would go in securities, 20% would go in real estate, and 5% in alternative, and 5% in private equity. So alternatives, we're talking about things like copper, gold, and stuff like that. Private equity was like, hey, startups. I can buy stocks to a startup, or maybe just fund a startup, and if it goes public, yeah, I become a really rich guy. Otherwise, but otherwise, it's just security and real estate and the basics that you understand. If you see here to the right, I have this graph that kind of shows that breakdown as well. It's just a breakdown of what I have here. And then next thing, so I take down my securities, I break down my security down even further. So I'm looking at, hey, under securities, I want to buy index fund, a managed fund, individual stocks, ETFs, and bonds. So if you look here, it shows you how much money I'm putting in each category. So almost 85% of my investment would be in index funds. I'm looking at maybe it's 5% in managed funds, but I'll see in hope someday I might even move everything up to index funds, because I don't really see managed funds are not really outperforming index funds. Even Warren Buffett really believes in index fund, and so I go with that. Individual stocks here, some of the stuff I play with, I buy some stocks like I have Apple, Chesapeake, and stuff like that. I just buy on the site just to kind of play with those. And then ETFs and bonds. If you see, bonds here is 0, and that is because I don't plan on retiring anytime soon. So I'm actually putting more of my money into index funds, which is more on what I mentioned up here. My portfolio objective right now, I'm being aggressive, so that's why I'm putting 0 in bonds. And then so as soon as I get to the point where I start approaching retirement, this number is going to change. This is going to be going down, and this is going to start going up, because bonds are secure compared to stuff like index funds. And the next thing is on the real estate, and I want to get into the real estate market more and more. So my objective is to get single family homes, commercial property, and duplex and townhomes, or even condos. So right now I have one house, but my objective is to buy more houses as I continue to build my portfolio. So this is again the breakdown here on the right. And then finally, I'm looking at alternatives. So maybe get some gold, silver, copper. I haven't really invested in this yet, but I have it as my strategy. I'm gonna break it down, put some money in there down the road. And then private equity, I'm still looking for the right opportunity to come along. Maybe get into some startup, and who knows, or hopefully someday something would show up and I'll invest in. I've actually gotten some people reach out to me with some products that I've taken a look at, but again, I didn't really see the potential, and so I didn't really invest in those companies. But I still really have my eyes open, so I'm still watching to see what happens. So there you go, guys. So this is kind of my portfolio breakdown as to how I plan on investing and doubling my asset every 3 years. Again, this is what I consider that would work for me. It doesn't mean that it should work exactly the same for you. Again, your objectives when you plan to retire, how much risk you want to take, those are the things that should drive. How long do you want to keep working? Those are the things that you want to use to drive how you build a portfolio like this. So I hope this is very useful. I'm gonna put a link to this spreadsheet down in the YouTube description, so you can definitely download it and just change these numbers and make it match whatever you think. Fill it out, just like use mine as an example, and fill out your own as well. And then just like a side bonus here, guys, I'm going to show you guys how I go in depth into picking my funds. So here I have a bunch of index funds that I actually looked at, and so if you see the different steps that I have here, what I take into account, I look at expense ratio, minimum investment dollar, fees, risk potential. Then I look even average annual return over maybe a 10-year period. So I put that number down, and then even this sector diversification for the portfolio, stocks holding, I want to know what goes in there. So I have that when I pick a fund, I make sure I have all this information, in that way I can decide. So if you see, all the expense ratio that I have here are under $1, way under. Again, guys, this is my research. You have to do your research based on what works best for you and your objectives as you plan to build your portfolio. So don't just take these numbers or these funds that I have here and go just buy them without really doing your homework. So again, like I said, it takes proper planning. There's proper preparation. You have to understand what works for you, where you want to go, before you start just putting these numbers into place. So again, this is just something to guide you to work through it. So if you see here, so actually, I don't know what happened there. Let's see. Okay, there we go. So if you see over here, the required for the risk that you're going to take, 5 would be like the most risk. So if you look at the funds, if you go to Morningstar will rate all these funds from 1 to 5, 1 being really safe investment, and 5 means like high risk investment. So if you see most of my funds, if you look at the risk that I'm taking in there, if you see here, it says there's 4, there's 5, which means it's very aggressive. 4, 5, 4, 5. I don't have anything under 4, so I'm really being aggressive here. So if you think that you're going to retire in the next 5 or 10 years, you might want to look at funds that are a little bit lower in risk. So maybe the 2s and the 3s and maybe some 1s in there even, so just to keep you safe if you really plan on retiring. And then last but not the least, I have another tab here, which is for money market account. And I have a video that I actually created. I'll put a link in the YouTube description, the YouTube card up there, even in the description too. I'll put a link to that video so you guys can take a look. So I kind of listed my 5 best money market accounts. So if you have money that you've saved for your emergency, say you have $10,000 or 15 or 20 that you've saved for emergency, even 5 or whatever, instead of keeping that money in your local bank, you can put it in a money market account. And this is how I came up deciding which money market account I would put my money into. So I looked at the minimum to open, the APY, that's average percentage yield. I look at ATM withdrawals. Can I use that just like a regular bank? Are there any maintenance fees or mobile check deposit, check writing, and access? So I look at those different things, and right now I'm actually using Capital One 360 money market account. They're paying about 1.1% APY, which is really good compared to all the other guys that you can see on this list. And just look across, unlimited ATM withdrawals, no maintenance fee, mobile check deposit, yes, check writing, yes, and access is 24/7. So that's whenever you need your money, you can get access to it. So that's why I use them. And also, I'm gonna put a link to Capital One 360 in the YouTube description below. And the reason is that if you click through that link and open an account, I get a 25% commission for doing that, or kind of not really commission, but it's just a bonus for doing that, for referring you to it. Hey, it's good. If you put your money in your savings account at your bank, you get like 0% return. Why would you want to do that? So you might as well do it. And if you have to do it, hey, do me a favor, click on my link and just open yourself an account, and you can do everything pretty much online and transfer your money from your local bank over to Capital One 360, and you should be good to go. So I hope this kind of helps you start putting together your portfolio. There you go, guys. That's my strategy for building wealth. You've seen my portfolio, and that's what I follow as I continue to invest and build wealth. So feel free, I'm gonna put a link in the YouTube description below so you can download that spreadsheet, modify it so that you can also follow the steps. Remember that no two approaches are the same, because you look at the different objectives that you want to do when it comes to retirement. If you want to retire early, you want to retire late, or if you want to take more risk or take less risk with your investment. But definitely feel free to use the document that I'm going to share with you guys in the YouTube description below. So question of the day: what's your strategy for building wealth? Let me know in the comment section below, and as always, some of the best tips come from you guys in the Plenty's community, so definitely connect with each other in the comment section below. Like the video if you like it, and don't forget to subscribe to the channel for more videos like this. And until next time, Plenty's is helping you reshape your financial health. Keep crushing that debt, and we'll talk soon.